Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the world of corporate filings. Today we're looking at a company that's making waves in the underwater robotics industry, so let's hope this report doesn't leave us all at sea. We're taking a look at an 8K filing from Nauticus Robotics, dated March 5, 2025. This is a current report, meaning it's filed when a company has something important to tell investors. The big news here is that Nauticus Robotics is buying a company called Trepid International. This means Nauticus is expanding its business by acquiring another company and its resources. Trepid International is actually made up of three smaller companies all rolled into one deal. Nauticus isn't just buying a few gadgets. They're getting almost everything that makes Trepid tick, including the robots, the know-how, and even some of their responsibilities. It's like buying the whole playbook, not just a few players. Now let's talk money. The deal is worth $16 million. How is Nauticus paying for it? First, they're paying $4 million in cash upfront, meaning right away. Then they'll pay another $4 million in cash by September of 2025. So that's $8 million in cash total. But that's not all. The sellers might also get shares of Nauticus stock worth $5.5 million. These are called earn-out shares, which means the sellers only get them if the business does well after Nauticus buys it. It's an incentive for the previous owners to help make the business a success. Finally, Nauticus is also taking on $2.5 million of Trepid's debts or obligations, also known as liabilities. It's like saying, we'll take care of those bills. There are some rules about how many shares Nauticus can give out. The deal says the sellers can't get more than about 20% of the company's total shares. If the $5.5 million worth of shares goes over that limit, Nauticus will pay the difference in cash. To protect their investment, Nauticus is making sure the people who used to own Trepid don't just turn around and start a competing business. The agreement says they can't compete with Nauticus, steal their customers, or poach their employees for 3 years after the deal closes. That is called a non-compete agreement. This deal isn't done yet. There are some conditions that need to be met first. Nauticus needs to do its homework, known as due diligence, to make sure everything Trepid has told them is true. They also need to get permission from other parties, like maybe a bank that Trepid owes money to. This part just says that because of the deal, Nauticus now has new financial obligations. It's basically a formal way of saying, we're taking on new debt and responsibilities. This is related to the earn-out shares. Because Nauticus might be issuing new stock to the sellers, they have to report it to the SEC. It's called an unregistered sale because the shares aren't being sold to the general public in the same way as an IPO. To keep everyone in the loop, Nauticus put out a press release about the acquisition. This is to make sure all investors have the same information at the same time. It's all about transparency. Here is the press release about the acquisition that was issued by Nauticus Robotics. Now, what does this all mean for Nauticus Robotics? Well, buying Trepid is a big move to grow their business. Nauticus is betting that Trepid's technology and expertise will help them become a bigger player in the underwater robotics market. The earn-out structure helps Nauticus mitigate risk, because if the acquisition isn't successful, then the sellers get less money. A risk for Nauticus is debt. They are taking on debt while giving away equity. Overall, this looks like a strategic move for Nauticus Robotics. It's a bold step to expand their capabilities and market reach, but they'll need to manage the integration of Trepid carefully to make it a success. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings. Let me know in the comments what company I should decode next.